On a summer evening, and it sounds like a song. I want more berries and that summer feeling. It's so wonderful and warm. Breathe me in, breathe me out.
All right. Good morning. Good morning. It is 6:32. As much as I try and get here at 6:30 on the nose, so much prep. It's August 14th. It's Wednesday. It's CPI day. Take a look at disclosure. All right, guys. My name is Scott Redler. I am the Chief Strategic Officer of T3Live.com. Welcome to today's morning call. Actually, this isn't the morning call. The morning call I do at 8 o'clock for Redler All Access subscribers and the Alpha team. This is the pre. This is the 6:30 quick version to my dogs around the world who don't subscribe, but that's cool. You know, they usually do become subscribers. But anyway, at this point, if you can make money this way, you can make a lot of money, watching positions live, getting 40 charts, etc. But if not, cheers to you for just tuning in and getting your day started. It's good to have you. All right, today's a tough day. We're at an inflection point, where we had a big bounce, literally, I would say, what was it? Today's Wednesday. So 8 trading days ago, I was sitting here talking about buying in the hole, buying Apple below 200, buying NVIDIA in 92, buying the SPYs, 512 down. And now here we are at 540 plus. And it's like, wow, what's going to happen to the CPI? So you got to do what you can handle. You have to have multiple plans. I've been trying to give you the play-by-play on how I've been trying to navigate this. And I'm a little on the rocks today. But anyway, let's go to some of the dogs around the world and just say hi. We got Sam in the house. We got Tappan Denik in the house. We got Ben Berger. What up? What's up, Allison? From New York City. Look at that. It's always grinding and grinding. We got Jose. We got Blair. We got AC. We got Scotty Gids. What up, Bobby 4.0? Got Austin in the house. Nyack. All right, so let's get to it. So let's just quickly go to the chart of the SPYs. There she is. So, you look here, you look at the head and shoulders top that we had that broke, and basically gave you your 25-point measured move down to 510. Who would have thought in 1, 2, 3, 4, 5, 6, 7 trading days would be right back to 542? I know, I didn't think so. I knew that I was going to play some kind of bounce and stay with it as long as it, feels good and continues to reward you. And now here we are. So for me, I targeted this 540, 542 zone. So in order to manage my, longs and shorts and try and make money with different ends of the range, I started shorting the 541 calls, taking in like $2. So I'm short from 543 and short some 544 calls that I took in $1.50. So I'm short from like 545, which is this area. I got to believe in this area, we're going to find some kind of resistance one way or another. So to me, I didn't short on this day when some guys thought this was it. We're going to get rejected at the 8th day and come back and make new lows and rolled it up. I stayed with longs, nice amount of longs, Apple, NVIDIA, Amazon, this, that, you name it. And I'm still in some longs, but I started selling premium. So now, with the SPYs here at 542, I have to think of how am I going to manage this? Because, it's friggin', we learn every time. And I did this sequence better than this one. I remember this active sequence, if you remember, okay, we bought the Blood in the Street account right here on that close, and I got rid of it here at new highs. But I remember, I feel like we had a good set of options here, bought some back here, and then, right here, we, into this move, I'm like, we reduced risk, or right here, and then PS, it just continued, and then we just managed the trade. So this time, at least I stayed really net long, probably up until here, and now into this area, I probably get net short. Like if the SPYs go up, 6, 7 points today, I'm going to be in a little pain, overly hedged. I hate being overly hedged. We all know how we make what makes us tick. And to me, when I lose short, and try and be cute, that's what irks me. I'd rather, lose a little long than short. But some people like Red Dog, you're out of your mind. But anyway, so what could happen here is a few things. Okay, The PPI came out yesterday, was light. Everyone kind of knew the fix was in. Gapped up 3 points. We went up 8. It was a gap and go, and that's what a gap and go is through all these moving averages. Just, and anyone who is still short probably got squeezed out and said, I can't take this anymore because they were short the SPYs. For me, I shorted premium above, so it gave me room. Like I short the 541s here. I'm still up money on them because I got paid like $2 in premium. So that gives you 543. You could convert me short Friday at 543, but we could be at 548, but whatever. So anyway, I'm just giving you the rationale. So, if the CPI is in line, chances are we're up or down a few dollars. They stole from yesterday, and we probably relax here, which wouldn't be the end of the world. If it's really light again, and we gap up 5-6 points, into this just a 547.50 area, which is where we broke down from, if you remember, on July 31st, which would be a high, a lower high, another lower high, which would be a likely spot. What I'd have to do is I'd have to sell some longs and probably sell a little bit more premium, and then hopefully we go from up 5 or 6 and we just retrace lower, put a little bit of a topping tail in here, and then from here it wouldn't be the end of the world if we came back to retest this gap and went from here. Even if we're going to go up in the next few weeks, the straight line pain trade is tough for a lot of people. Okay, so maybe we go like this, come in and then work our way back to this 536, and then go. A lot of people were talking about this W retest, before we hit our peak. You never know where your peak is before you do that. But anyway, or, CPI is a little hot, and then all of a sudden, we open them down 50 handles, and then we'll see, do we hold the moving average in this area? And then what I'll do is I would make a lot of money on all this premium I sold, and then lose a little bit on my longs, but then maybe be able to buy some more longs in the hole. So that's kind of like, the thinking. And then, you go to the IWM, at this point, I had actually, I have some calls on. I'm not long the SPY because I'm short the SPYs. I have some just in case it came in really light and it wanted to test 211 to 215. But at this point, I'm not very optimistic on those. So we'll see. The perfect scenario would be if the CPI is light, the SPYs do nothing, and the IWMs go up 3-4 points, and I suck in premium, make money there, and then all the different stocks trade the way all the different stocks are going to trade. But who the hell did I sell? I don't sell the blood in the street account. So James is asking, let's see if you could see this when I put this up here. So this is everybody asking me questions, by the way. If you're on, I think on YouTube, ask questions. No. Typically, unless I have multiple tiers on, which I didn't put on, I only put on one tier. So usually when I put on one tier, it means we only pulled into one level. So like even here, when I put this first tier on, which a lot of people made a lot of money, here I waited till about there and I sold it and carved out 5% for that account, put it back in a fixed rider. If like back in the day, hold on, when I put two tiers in, a tier 2, tier 3, that means we were down like 15, 20% off highs. And then sometimes you rally 7% up, and I take the second tier off and I keep the first tier that I had on and I wait to new highs for that. So I make money on both. So for here, excuse me. Although it'd be, you know what, if they continue to squeeze, if we gap up like 4 or 5 points and they do another day like yesterday, today, up to here, I'll take it off, because that means I will have made her, because I put it to work on this day on the low, on the close, she will have made 5% in a week and a half on a nice sum of money. Then I put it back in a fixed rider. And then if we continue to go back to highs, 401k, 520, all those make money. And she's back into a position where I have cash for blood in the street. So it doesn't get done. But if you do buy your swing account based on when I put this out there to the world, which I did, a lot of people were mad at me. Like, oh, Red Dog, we buying at 517. We're going down another 15%, 10%. I'm like, okay, so then I'll get another tier or two. Anyway, I would reduce in your swing, but anyway, this is a cool, 515 to 542. It's a lot of points, and you could have done options. But anyway, so what am I in long wise? You know what? I'm in a little Amazon, even though Amazon was frustrating as hell, and Amazon screwed a lot of us right up here. That was then, this is now. So, we made really good money, if you remember, on these 2 days when it broke above this. We just thought there'd be another move, which there wasn't. So if you look right now, Amazon is in the earnings gap. So I was buying a lot of it through this 168, 169 with the Alpha team, and I still have some on. Amazon right now is what? It's up 50 cents, not a whole lot. The gap gets filled to 181. If all of a sudden the CPI is light, or in line, and the futures go down, chances are I'll add a little bit more Amazon and use this as an out. If it breaks this, then you know what? Then it's over. That's the only little poke that's head in. If it wants to continue up, I feel like there's a decent amount of gap to fill. So I'm still long Amazon. I'm still long Tesla. Tesla also had a pocket pivot. We went over this, on Monday and yesterday. I was buying options in here just in case it was going to trigger, which wanted to make me really good money yesterday. I sold half of those. I still have half for Friday. And I traded the stock, long. It got above 288, 230, 203, went as high as 208.49. So yesterday was a really nice day trade in Tesla. Just it. I'm allowed to day trade too. We all day trade. Some people don't admit it, but why not? If you could take cash flow out of the market, that's what we do for a living. That's how I get paid. I get paid quarterly. So anyway, this is yesterday's high. I think this is down to like $1 or so. It's down 60 cents, not a big deal. So if the CPI is hot and it opens lower, I'll probably buy more. Okay. You could go like this. You can go to your daily chart and go to your intraday and say, where should, you maybe buy more if it dips. I would think if this is any good and this dips, you could look at your daily chart from the day before. This is how I connect all the dots. I'd say, right around here should hold. This is like this 204 area. So maybe, that would be a spot that if, again, all of a sudden in CPI is in line or hot and the market comes in, chances are you could probably buy into here. If, it's light and everything goes up, then chances are it takes out this 208.49 and then we reduce into this 210, 214 zone. So that was a nice setup. If you don't want to carry positions, you got to look for good trading setups, and that was a good one. Apple, I sold just because, it just, to me, I didn't think it was going to really get too much through this 220-ish area, and it did. I actually made a little bit of money cute short there yesterday, but then got away from it. But again, if you remember, on that Monday, 8.5, we were buying. I actually bought it and I didn't even know it. You're a poet and didn't even know it. So what happened was I when I tell you about all my accounts. I have an active account, a swing account, a box account, and an option account besides the Redler long-term accounts. In my swing account, I put some bids in some things that I wanted and I was trading. So I put bids in an Apple from like 198 down and I got filled to 196.50. I put bids in NVIDIA from like 92 down to 87 and I only got like 90.60s. But anyway, that was a great day. But from there, look at this friggin' move. So I would think this 224 would be a brick wall. Let's see what Apple's doing this morning. Up a whole 19 cents, 221.46. Let's put that in there. Okay, yesterday's high is important today. In order to go up another day, what does that have to do? It's got to get above and stay above 221.46, and then there's 224. Okay, if it pushes through and comes back, maybe it does a red dog reversal sell. So if you are looking to be a cute short into a bigger area, that's cool too. But what I wouldn't be doing is if you are, a day trader, if this is going to be your first buy up here after missing this whole spot, you better check your system and your process because you're chasing now. But anyway, Scott, in intraday you go lower than 5-minute chart. Rolando's asking me some tactical. Usually I set my morning up based on daily charts, prior day's highs, sometimes prior day's lows, other spots on the charts. But intraday, I do have a 3-minute chart to start because you have smaller time frames. And then after, usually 10 o'clock, you can go to a 5-minute chart, 3, 5. Some people do 1-minute charts. Some people do, there's too much noise for me on 1-minute charts. I have too many positions going on and stuff like that. But there are people that day trade only and don't take overnights that have like a 1, a 3, a 5, and a 15-minute chart. What do I think about Bitcoin? I think it's holding in. You had a buy in the hole, you had a buy a dip, and the whole the whole range is building. To be honest, let's see where it is right now. Wow, it's back at 61. Ooh, another little pocket pivot here. Look at this. Okay, pretty tight here. It looks pretty good, to be honest. You had your stop everyone out below 53, got tight. This was your lower range that triggered, went to 62, and now it's rebuilding in here. That next time it goes through 62, chances are it goes back to 65. And at some point, this huge channel that Bitcoin is in will resolve to the upside, and you'll see 85,000 to 100,000. Just a matter of when, and that's what everyone's trying to time. So it looks pretty good. Some people were looking at coin yesterday. I wasn't, but this coin is really tight. So just like some of those other tight lower levels, this could give you a move up to here. Okay. This is where it broke down from. I actually lost money in coin up here. Actually, no, look at the red dog reversal sell. Actually, I did lose a little bit of money up there, but I remember I'm like, Bitcoin's back to 69, 70,000 and coin's coming in. What does coin know? And coin knew it was going lower. So maybe it wants to pop back into there. So, this coin lower level chart looks like Microsoft's lower level chart that we talked about yesterday. Look at that. You have a pocket pivot. This was my chart I posted to Redler All Access. Most names have lower pocket pivots, which was what that was. If it wants to clear 410, it could see 420. Well, it cleared 410 and there's 420. It's not rocket science. It's just, trading. Nvidia has been my best stock. It's been my best stock of the year, not only for money, but for clues to the feel of tech in the semis. If you look at Nvidia, Nvidia gave a lot of clues to what was going to go on the past, whatever it is, the past week. So if you look here, this was where I was like, maybe it could hit 80, 87.50. It never did. So I started buying it below 92 and give you a 2-day snapback. Then if you remember, that reversal was the day the SPYs hit the 8-day and reversed. It looked like we were going to go back and retest this area. Instead, a red dog reversal. It traded below 98.69, came back above, got really tight. This is how we started the week. And then it triggered above 106. It cleared 108. It held 111. And then boom. So now your next big level here is this 118 to 120. And that would wind up being a high, a lower high, and then some people might even point to a double top if it gets there and fades. I am long the video also. AMD also, cleared a lower level pocket pivot. We talked about this on Monday. A lot of people made really good money. I made little money. I didn't stay with it. I should have stayed with it. Red Dog didn't stay with it. And I remember yesterday we were doing this, and all of a sudden it went from down up $1 to down $1.50, and it looked like there was news out there, which there wasn't. It just was trading. But anyway, this was the plan. Some are long versus 129. This is 129. Others waiting for high volume above 138. This is 138. And then here's the green line, which is 143-ish. So that's the language around the chart. And the language is very important to read with the chart. And typically all that language makes a note that goes out to my subscriber base at 8:30. But anyway, yes, I did buy options on Kellogg or whatever this is on Friday. And, I thought that there would be a takeover over the weekend. And basically I was, I unfortunately didn't hold it. And some people that said, hey, we put on an option, we have it for a reason, we have the whole week. It's Wednesday. And now all of a sudden, this K is up 550. So if you took the calls for $2 or $2.50, you're making 100%. Congratulations. I sold mine. Not a big deal. I'll move on. My job is to be your chief strategic officer. And, I bring the ideas, and some people, keep them longer than others. Remember this, though, Dash. Woohoo! Dash is something I really never traded. But again, during periods of volatility, you see what acts really well. And if you remember, Dash came out with numbers during that volatility and held in well. That was around here. And then this happened. So we got back involved. Remember, I'm like, if we hold to 121, takes out 126, it can continue. So this has been a new stock that got on the go-to list, that came up the list because it acted well during a volatile time. So that's what shows you the next potential good movers. And this one has been a good one. Same way in Mag 7 land, I said, that this is going to be the one that at some point is going to make a new all-time high before everything else, because it reported and acted well during, the volatile time. It took back all the moving averages before everything else, and it's been in this 6-month channel. So, if they let this start really go, then that we're probably not retesting those lows, and we're not going to be, getting too beat up. But anyway, we'll see how that goes. IBM looks good, making a comeback. It's been good for a while. AMAT's coming out numbers, yes. That's true. So it should dictate a little bit of of the semis. I told you guys about on, yeah, didn't give you much of a move, but a little bit. It's got a little bit more room if it wants it. All right, so listen, guys, CPI is coming out today. Okay, we've had a hell of a move, guys. Hell of a move. So you have to figure out what is it that you can handle. I know for me, my average price is 544 short the spies. That's where I'm short the spies, being short calls. So I have some room. I have some longs on too. So I'm managing a portfolio approach, meaning trying to stay with some longs that are working and I'm trying to be hedged into higher areas. So I have to figure out what's going to happen here. If, again, CPI comes in hot, chances are you have this 536 area that is yesterday's gap. If it comes in line, which wouldn't be the end of the world, we're probably up or down a little bit and we need to digest. If it comes in light, maybe they give you one more gap where you sell some of your positions you've had, and then we'll see if we put a pivot high in and then it fades lower to then relax. So multiple plans is the way you got to do it, and do only what you could really handle. If you can't do what you can handle, you're not going to make the right choices. If you don't make the right choices, you're going to lose money. And then if you lose money and you were right and made the wrong choices in the moment because you were too big, that's the worst. All right. Good luck today, guys.